Hello and welcome to the look ahead for Friday, the 22nd of March, with me, Fiona Cincotta, Senior Market Analyst at City Index. This week's been a busy week so far, and there are still a few more items on the economic calendar to be watching on Friday. Every night we've got Japanese inflation data. We've then also got UK retail sales tomorrow, German IFO business climate, and Canadian retail sales to be watching. Now, we're just going to jump straight on by looking at the pound US dollar. Now, the pound US dollar has fallen sharply today after the Bank of England interest rate decision, where the central bank left interest rates on hold at 5.25% as expected. But the vote was actually less hawkish than expected, with two of the policymakers who had previously voted for a hike voting to leave interest rates on hold. Now, that's been sort of taken as a view that the Bank of England is moving closer to a position where it could start to cut interest rates. That's seen the pound fall sharply. It had risen to the 128 level following the more dovish than expected Federal Reserve meeting on Wednesday, but it's faced rejection at that 128 level. It's fallen sharply. It's testing 126.70 at the time of recording. That's the weekly low. If we get a break below that level, then we could see the 126 level tested. Now, that's a level which has offered support right at the beginning, at the end of 2023 and the start of 2024. Also in February, we saw that level tested, and a breakthrough there exposes the 200 SMA. Now, obviously, just with regards to the retail sales data, if we do see further weakness in retail sales, and they are expected to fall 0.3%, but if they come in weaker than expected, then we could see the pound fall further. Now, on the upside, supposing we see much stronger than expected sales, although they would need to be really quite impressive to turn this around, the buyers are going to be looking for a rise above that 128 level in order to test 128.30, which was the December high, and then 129, which is the 2024 high. Also worth just having a quick look at the FTSE. If we can just see here, the FTSE has risen really quite sharply on the back of that weaker pound following the interest rate decision. It's taken out some key levels there. It's risen up to 7,900, which is where it's testing at the moment. That was the May 2023 high. Now, if we do get a rise above there, then that brings 7,940 into focus, which is the April 23 high. On the downside, as far as support is concerned, there isn't much in the way of support until the 7,800 level. And that's a level that has been offered support on several occasions across the past year. So just to mention then what else we got going on. We've talked about retail sales, German IFO business climate. We're expecting to see an improvement in the IFO business climate up to 86, up from 85.5. This is coming in with data that we're seeing broadly from the Eurozone, which has been improving, albeit very slowly, suggesting that the downturn perhaps in the Eurozone economy is starting to bottom out. Now, let's just take a look at the DAX. Now, the DAX, along with many US stocks, indices, trading at an all-time high. Basically, this is on the back of expectations that the major central banks are going to start cutting interest rates soon, and also on the optimism that the US could avoid a recession. So very much seems to be on track for that soft landing. Finally, the other one we're going to be looking at today is the US dollar Japanese yen. Now, US dollar Japanese yen has been very much in focus. We've not only had the Bank of Japan, who hiked rates for the first time in 17 years, but then we also had the Federal Reserve that caught the markets by surprise and adopted perhaps a more dovish than expected stance, given the fact that we've had 2 straight months of hotter than expected inflation data. Now, the US dollar, Japanese yen, again, it's been on a bit of a roller coaster. So we had the pair spike higher despite the Bank of Japan hiking interest rates. It has fallen off slightly after the dovish Federal Reserve. But as I said, we've got inflation data out for Japan overnight. Now, core inflation is expected to tick quite a bit higher to 2.8%, up from 2%. Now, that would support a more hawkish stance from the Bank of Japan. However, the Bank of Japan in the meeting did say that they weren't really looking to do too much more given uncertainty surrounding the Japanese economy. But if inflation does prove to be persistently above 2%, then that could start to fuel bets that the Bank of Japan could move again. As far as levels to watch here, we've got the USD Japanese yen trading caught between that 151.90 level, which was the multi-decade high seen at the end of last year, and between the 150.90, which was the previous 2024 high. So we're looking for a breakout there. Buyers are going to be watching for a move above the 151.90 level. But if we get too close to that and too close to 152, then that could start to fuel concerns of intervention by Japanese authorities. So that could be quite a difficult level for buyers to break above. On the downside, as I said, if we get a break below the 150.90 level, then that could create a lower low as far as the US dollar Japanese yen is concerned. So thank you very much for watching. I hope you've liked what you've seen. And if you have, then please do give this video a like. And if you'd like to receive more videos like this, then do subscribe.